Just going to take a deep dive into the consumer goods sector in Nigeria, looking at the half-year, second quarter results from Unilever Nigeria PLC. Revenues there up double digits, 27.3% there. Cost of sales, Lord, it's a big jump there. Gross profit, of course, we did see a fall. We also saw an operating loss and a 72.9% drop in their pre-tax profits. We're going to be talking to Dr. Omobola Adu, who is a senior analyst with Afrinvest Research and Consulting. Dr. Omobola, it's good to see you again. Thanks for joining us. Good morning. What do you make of these earnings from Unilever? I guess looking at Q10 and we're going to half year or so. What do you make of it?
Yeah, so to contextualize the results we're seeing here, I think we need to go back a few years back, right?
Yeah.
So during the course of the pandemic, we know that in 2019, 2022, and 2020 thereabout, the company recorded losses to the tune of combined of close to 10 billion.
Jeez.
Yeah. And now coming into 2021, I think what they did and what they had to realize is they had to go through a lot of corporate restructuring. So one key thing that they do was they sold off some of their assets, they sold their tea business, and that helped them to recover in 2021. So in 2021, profits jumped as much as close to 3 billion.
Yeah.
The huge chunk of that came from the sale of the tea business, which was roughly close to 2.7. Now, that restructuring that they did has allowed the company to concentrate more on their core activities, right? And in 2022, the numbers were good. But coming into 2023, because of what we're seeing now in terms of the FX impact, that really took a toll on the performance for Q2.
Wow.
I mean, if we look at the cost of sales, I know we are going to the H1 result, but combined, looking at cost of sales went up, like you mentioned. And if we look at the component breakdown, we're seeing that the FX, the revaluation loss from FX was a major reason why cost of sales shot up so significantly. And that's why we saw gross profit coming down. So, I mean, this is not something that is peculiar to just Unilever. It's something all consumer good firms are going through right now. We know that a lot of them have to rely on importation to get key raw materials in to produce these goods. And because the industry is highly fragmented, right, you have a situation where you're not just competing with multinationals, you have local producers operating in this segment. So Unilever produces food products, home care and personal products. And we know this place is largely, we have so many products. And these are some of the issues going through the company, because at this point, you can't aggressively increase prices because, you know, the whole economic environment is actually tough now. And basically, that's just an interpretation of what we're seeing in their numbers so far.
Excellent breakdown. Thank you so much. Now, but for the layman, if we take a look at the cost breakdown and that FX reevaluation matter, for the layman, that just helped us out. That's what is it from loans or what that particular FX hits that they took? Yeah, there it is. So the revaluation loss, 14.3 billion over a 1,200% climb. So in layman's terms, what does that mean? What happened?
Yeah, well, so basically it comes down to how they operate, right? So a number of them, to finance operations, like I mentioned, they have to source for these raw materials. So because of that, they embark on a number of trade facilities where they come in with agreements to number of banks to help them to finance their purchase of raw materials. So this revaluation loss is just showing the impact of the FX. So we know coming into the start of the year, the exchange rate, especially in the I&E window, was averaging close to 460 naira to $1. But by the end of June, because of the unification measures by the new administration, FX went up close to over 700. So you are seeing an impact of over 36 thereabout% increase in FX. And then these things are all accounting treatment, right? So how do you prepare your books? You're meant to reassess, especially if you have any external kind of currency. So you need to reevaluate it with the current rate at the time. So that over 30% jump we're seeing in the exchange rate is responsible for what we're seeing in terms of this huge, massive jump in the FX loss that these companies are are pushing out now?
It's it's a really tough environment for these players, as you've said. Selling that tea business, was that a good move? Because a lot of people were saying, well, this is something they've been known for quite a while, and I mean, how would you evaluate that move for selling the tea business?
Yeah, so I mean, if we look at core operations, right? So at the end of the day, as a business owner, you have to look through your product offerings. Which segments are the one contributing the most to your revenue? We also know that apart from this tea business that they sold in 2021, just recently at the start of the year, Unilever announced that they're exiting the home care and personal segment.
Right.
And to look at it, I mean, it's a bit mixed to analysts and investors because this segment accounts roughly of over 52% of total revenue.
It's huge.
And these are popular products that we have in Nigeria,
right.
The likes of Pepsodent, Omo Sunlight. But I mean, it also reflects the huge pressure that these companies are facing operating in the country. You're talking about inflation rates, talking about FX issues. So lots of these pressures are forcing companies to reevaluate their business. So they're saying that they want to look at investing in higher growth opportunity sector. I mean, if we have to go back to anything we look back, at least for the tea business, how it impacted their bottom line, it's maybe something investors could be looking at. But then again, you have to also look at the whole operating environment. Selling a segment that accounts for over 50% of your revenues. So how are you going to replace this?
Exactly. That was my next question.
Yeah, and at this moment, there is no yet clear guidance on the process about the whole restructuring. We know that in the half-year report, they booked about 2 billion restructuring loss, which we believe that it should be in line with their plans to exit this HPC segment of their business.
In fact, yeah, in the cost breakdown, you are correct. That too was 2.3 billion naira, that restructuring cost. So again, that's what you're explaining, right?
Yes.
In the selling of those items and then having to right the ship. Oh, what about looking at their finance income? I guess on the other side of the coin, although I know we can't compare a 14 billion reevaluation, there was interest on their call deposits and what is it now? And bank accounts. So to the tune of, well, it's 1 billion naira. That's not too. It's not too bad. But explain this. This is on the other side, right?
Yeah. So I mean, it's like a double-edged sword, right?
Yeah.
At the first end, you're getting beaten because of the FX impact. But at the other side, for companies so most of these companies also operate bank accounts where they have dollar deposited. So because of the revaluation, we're also seeing them earning higher interest income that they won't have unnecessarily gained before. So because of the reevaluation, over that 30% jump we're seeing in FX, that's also contributing to them. So in particular, if you even take a deep dive into their results, like you mentioned, in terms of operating profit, they took a loss of close to 3 billion. But when that cascaded down in terms of the finance income, that helped to support bottom line. So at the end of the day, they printed around 2 billion in terms of profit after tax, which was higher than what they did last year. So we're seeing that it was like a good and bad thing. So they hit on the cost aspect, which affects their direct business. And also they got benefits in terms of their placements of, because like we rightly mentioned, these companies have to finance raw materials purchase. So it makes sense for them to have a little bit of dollars on this side. I think they had roughly close to 10 billion that they had deposited aside for importation of raw materials. So at the end of the day, it's like twin benefits. You're getting the cost impact, but you're also getting the good benefit in terms of how that impacts your finance income. Fascinating
stuff. Incredibly fascinating stuff. The stock price, the stock market has done pretty well. I think 15 naira 75 kobo is where it closed yesterday. It's up about 38%. If you were 35, okay, so 35.7 so far. What's your view on their stock, I guess?
Yeah, so to have a good look at this, we'll have to look at the major factors that are driving this, right? And especially how you expect the company to go forward. So they plan to exit this HPC this year, right?
How many things are they going to exit?
I mean, so if they're exiting this,
Yeah.
for investors, it could be that they get to get profits or the earnings that would impact their bottom, right?
Yeah.
And that provides maybe an incentive for investors to get maybe a sort of bonus dividend from the sale of this business, where then maybe the rest to be looked at investing in these new ventures they are looking at. So that's a possible good upside to look at. But then on the downside is that what if they're not able to actually sell or exit most of these segments they're looking to exit? You also have to look at how much are they going to get. Is it going to be good value? Because it means they also need to write down some assets also. So at the end of the day, I mean, the outlook on Unilever is a bit mixed. It's more or less you want to hold to get a little bit more clarity on at least for the rest of this year. Then maybe once we have more guidance on their plans to reposition their whole business, it could then be another time for you to now reevaluate and see, oh, what could this mean for the company's shares and for investors holding the company?
See, and that is a testament to the consumer goods sector. So looking at taking a holistic view of consumer goods in Nigeria, I mean, what's your assessment? Must be tough.
Yeah, so it was tough, but the good thing was that in terms of last year, performance was actually good.
Yeah.
So most companies in the FMCGs recorded profits, the likes of Dangote Sugar, Boa Foods. We're expecting flour mills results soon. So in general, most of them recorded good results for 2022. But I mean, this year is a different ballgame, especially with that FX impact. We know that lots of them have external borrowing, so that's going to really impact in terms of the finance cost. So companies like Unilever that basically rely on intercompany loans because they're subsidiary of the big Unilever, so they are able to negotiate better rates. But for companies that have to depend on borrowings, they get to really take a hit this year, which could impact the whole industry.
Wow. A minute to go. What is this? Are there infrastructure moves that can be made or investments to where they don't have to import so much? I mean, how can the Nigerian business environment help out these companies to perform better?
Yeah, so it goes back to what most of them are already doing. So like I said, most of them have to take on trade facilities. So the good thing about these trade facilities is that basically you just have to put off a certain amount of naira aside to cover this transaction. Then it's the banks that have to do the whole sorting. So I think what we're going to see is they will keep on relying on trade facilities to basically finance their raw materials purchases. But for companies that already have extensive loans, there's really nothing really much to do apart except they want to look. Yeah, they are really stuck. Except they want to look at restructuring. We saw recently what happened to Cadbury and some other FMCG. So it's a really big thing. So at the end of the day, it's going to take a lot of making good strategic decisions in order to navigate this period that we are having.
Interesting stuff. Wow. So, hey, look, it's fascinating. There's a lot going on, and there's also the inflation factor, right?
Yes.
There's so much of that. Dr. Omobola Adu, Senior Analyst, Afrinvest Research and Consulting. Thank you so much for the deep dive in the consumer goods sector for Nigeria and taking us through these results from Unilever Nigeria PLC. Appreciate your time.
Yeah.